Well, if stocks rise post-election, could the U.S. become the world's best-performing developed market? Welcome to Trading Nation. I'm Eric Chemi, joined by Gina Sanchez of Chantico Global and Rich Ross of Evercore ISI. Gina, the current leader among developed markets is Canada, our northern neighbors. There's no wall between the two of us. So could the U.S. come from behind to overtake its northern neighbor?
Look, I think that there is a possibility. If you look at the biggest performers in the international space, they've been countries like Canada, New Zealand, Australia, and what you can see about all those, Hong Kong, is there's a few elements that are pushing that. One is the stabilization of commodities. Obviously, oil prices have been a huge plus for Canada, but also commodity prices and the stabilization of China. The thing is that I see a lot of potential for disappointment in that story, which tells me that there is a significant downside to a lot of these. And if you look at how OPEC continues to disappoint, we haven't seen any movement towards an answer to the supply glut that we're facing in the oil markets. I do think that there's downside in the oil markets as well. The U.S., on the other hand, really looks poised to rally off the back of a Clinton victory. We have seen the markets price in the next Fed hike pretty well. I think we could get past that pretty easily. And we're starting to see earnings continue to show some improvement. And all of those things could actually stack up against that bear story I just told you to bring the U.S. back to the top.
Rich, what do you think? Does the U.S. have a shot going forward in the next administration?
Yeah, I think Gina makes some fantastic points here. The only caveat I might add is that the diversity or the strength of our economy is almost a double-edged sword by virtue of the fact that if we get this sort of global risk-on rally, if you will, that some of these more highly concentrated markets might stand to benefit more on a percentage basis. So just relatively speaking, take a market in Hong Kong, the venerable Hang Seng Index. 20% of the index is made up of two stocks, really. 10% is Tencent, coincidentally, and the other 10% is HSBC. Now, this stock is up over 35% since Brexit. It's gotten caught up in that euphoria, sort of a cross-listing with the FTSE and also the Hang Seng. So if you're looking for bang for your buck, while I actually think the chart sort of broke down here going into the election, if that breakdown in the Hang Seng proves false, you're going to get a nice risk-reward to the upside, which could probably overshadow what you see in the U.S., which is not to throw shade at the S&P 500. But once again, this is a big developed index here in the U.S., and you're going to get a little bit more bang for your buck in some of these more highly concentrated global indexes around the world that are dominated by one or two big stocks like we see in the Hang Seng.
Gina, real quick, what do you think about what Rich said? The U.S. is so broad, it's so diverse, it's not going to be a single focus market like something in Hong Kong. Would the U.S. ever have an opportunity of being the #1 player in the world just because it's too diversified?
I don't disagree with what Rich said. However, I will kind of point out that the case that I'm making is actually not one of a risk-on story. If we went into a risk-on story, he is absolutely right. There are higher beta markets to play that story. However, I am looking at a story where China disappoints, where oil disappoints, where Brexit is triggered. All of those represent downsides to the rest of the nation, while we're going to see a stabilization in the United States. So really, I'm talking about a pretty idiosyncratic story.
Well, Gina, Rich, thank you for coming on. And everyone else, thanks for joining us here on Trading Nation. I'm Eric Chemi.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.